This segment is all about maximizing the value of your business in the Canadian market.
Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you build a better life right now.
Welcome to the program. I'm Mark Imperial. Joining me on this segment is expert business broker Jim Nairn. Jim, welcome to the program.
Hi, Mark. Thank you for having me today.
Jim, we're talking about maximizing the value of your business in the Canadian market. So can you tell us a little bit about that? And I understand that there are some terms like share sales and asset sales. Tell us about that, please.
Well, there's quite a few differences to be honest. It depends on kind of the nature of each particular deal that's going on. But one of the biggest things that we have here in Canada anyway is that up to $1 million, well, 1,016,000, if you will, can be of the purchase price of the business can actually be tax free here in Canada if your business qualifies for that exemption under the share sale. So that can be a huge tax savings of anywhere from like $200,000 to $300,000 or more for the business owners, depending on the nature of their personal portfolio, if you will. But most people in Canada that I work with, roughly about 95% of them or more, definitely prefer that type of a transaction over the asset sale.
Now, being in the States, this is all new to me. So I want to clarify that a little bit because it sounds tricky. They must bring up a lot of questions. What's the biggest question people have around, which method should I choose, if any?
So quite often it just honestly comes down to the after-tax dollars that a business owner is going to be able to realize once the transaction has been finished. So sometimes it makes sense to go up with the lifetime capital gains exemption with a share sale, and other times it actually makes more sense to do the deal on the other side of things called an asset basis, whereby you can still buy pretty much everything that the company owns that you would need to run it and operate it, except for the operating shares and a few other little things that the business owners might need to keep. So you're saving yourself. The end result is you want to be able to save yourself from a tax perspective, from the seller's point of view.
There must be a lot of information or misinformation around this topic. What are the biggest myths or misconceptions people may have around the share sale or the asset sale?
Indeed, you got that one pretty good, Mark. There are a lot of myths out there and misconceptions regarding some of the liabilities that buyers particularly think of when they're going to be considering taking over the share sale. It's like, oh no, they have these big fears of skeletons coming in the closet and a lot of people coming after them after they buy the business to say, hey, you know what, you owe us umpteen thousands and hundreds of thousands of dollars because of this and that and the other thing. And meanwhile, there's number one, if any of those things are going to be happening, that's part of my job in the beginning, is to try and identify all of that and account for that. And they say, hey, you know what, if you're looking to buy this business, you need to know that yes, indeed, there is a lawsuit happening that the company is involved in, and or the shareholders, and this is the potential outcome of it. We've dealt with that before, where we just leave some money in trust or in escrow. That's starting to happen more and more here in Canada, from the purchase price, the funds of the purchase price, enough to cover the potential liabilities, and say, hey, here you go. You can still buy the business, you can still take it over, but this potential liability is covered. If it never realizes and nothing materializes, then the seller gets the money, the buyer's free and clear, everything's good to go. Or if it does materialize, they just settle up from any discrepancies in that sort of slush fund, if you will, to say, hey, okay, you know what, this is what was needed to be paid as a result. And then if there's anything left over, the seller would get that, and the buyer just keeps going as per. There's also the insurances that the business owner has, as long as they have the proper insurance coverage while they were operating the business, their insurances should be able to help protect them and the new owner from anything that could have happened previously. Um, and there's also lots of ways and covenants and the like to put in to the documents when you're buying the actual final purchase and sale agreements. When those are finished, there's lots of covenants in there to help protect to say, hey, you know what, as far as we know, there's absolutely nothing coming along the way. And if anything does come up that happened on my watch, I will be responsible to cover the fees for that kind of thing. So there's lots of protections that can be put in place for the buyers when they're taking over on a share sale, which they just so many of them are like deer in the headlights when they think about it kind of thing. But once we walk them through and we educate them on the process, again, 95% or more of the deals we do are done on that premise.
Is it possible for you to share like an example of real life example on how a business optimized their sale value through either share sales or asset sales, and specific scenarios maybe of what influenced the choice between the two?
Indeed, Mark. So I literally just had one this past week here, April 1st, where we were originally putting the business on the market as a share sale, but as we got an accepted offer in place and we got closer to the end of the due diligence period, the accountant had advised the seller that, you know what, you didn't pull this money out, the excess funds that are sitting in the bank account. You didn't pull this money out ahead of time. And if we actually take that out now and sell the business as a share sale, you're going to pay more taxes on taking this money out versus just selling the business as an asset sale, paying the taxes on that and keeping the money in your corporation. So thankfully, we were able to go and just change the documents, the final sales documents to reflect the new structure and allow the business owner to keep the existing corporation and allow the new buyer to get all of the assets that they still needed, the company name, everything like that, the rights and so on and so on, to be able to operate the business successfully going forward. And it still turned out to be a win-win for everybody. So yeah, just at the last minute, the changes can definitely, you need to prepare ahead of time to make sure that you can literally capitalize on that properly.
That's really a great insight on that. Jim, is there anything in regards to, share sales versus asset sales that I didn't think to ask you that you feel is important to share with business owners?
I think really the big thing is just the misconceptions out there. Again, even still, some lawyers and buyers, especially on the buyer side of things, they just have those fears about, well, what if something's going to come back and bite me after I buy it, if I buy the shares. Again, the protections, and if you're dealing with businesses that are just general sort of like retail businesses or the like, and there's not a really big possibility of something, kind of literally life-threatening injuries or a loss of life situation happening with the business that you're buying, the risks tend to be decreased if you're just buying like a corner store convenience as opposed store a corner convenience store as opposed to buying like something a construction company or a demolition company or the like, where there's a greater potential for some serious liabilities down the future. So again, it's just understanding the actual risks and just what they mean in comparison to what you're looking to do.
Jim, this has been terrific. I really appreciate you taking the time to share with my audience, and I wish you continued success for you and for all of your clients.
Thank you very much, Mark. I appreciate that. I hope you and everyone else has an amazing rest of the day. So if you enjoyed this video and want more real-world information about buying, selling, and or valuing a business, feel free to connect with me directly on LinkedIn or through my website at trilliumbusinessbrokerage.com. Either way, I'd love to connect and keep the conversation going.